Yeah! Turn me up! Turn me up! Oh, for show. Oh, faux show. Hey, welcome. It's Tuesday. It feels like it's Friday. My butt hurts. My leg hurts. My back hurts. It's only Tuesday. Oh my gosh. Welcome to Forex. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Ni hao ma! My name is Wayne McDonald. I'm a currency trader. Yep. The yen hurts back here. The dollar hurts back there. Yeah, so much going on. What an interesting world. Certainly not boring. So anyways, welcome to Forex.Today, the YouTube community of more than 19,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis. I'm actually going to go through the calendar a little bit. Why not? You know, we got a big week. Lots going on. 20 central banks reporting on policy, and many of them in some form of change of policy, which is really good for us. We also need to close out the year with some pips in our pockets. So ask questions, get involved, let me know how I can help, and I will do my best. Speaking about best, the best foreign exchange brokerage out there is tradersway.com. Why? Narrow spreads, huge swaps, fast execution speed. Hey, well, that's pretty important, right? Yeah, give them a try. They earned my loyalty and respect about 7.5 years ago. Give them an opportunity to earn yours. Tradersway.com. Go there ASAP. Get it on. Get on with it. Jambos Milos. Jumbo Milos. Your back problem is contagious. Yeah, is right. I felt like that. Well, mine was weird because I was up late trading, of course, and then just in the middle of the night, I just woke up and I'm like, I've been waking up because of my hip pain from sitting in my chair so much lately. And then all of a sudden it was just like lower, sort of middle back pain, and it just kind of woke me up. I'm like, I got to get out and do more. But man, this is it, man. This is what I do. What can I say? It's, war injuries. So anyways, here he is, Forex.Today calendar. Okay, what I want to show you, oh man, why don't I have glasses? I left them upstairs, gee whiz. It's like a quarter mile to go to the other side of the house and get my glasses. I got dollar store glasses, but that ain't gonna do much for me. No, that'll make it worse. Anyways, here's what we're doing. An inside look today on inflation. Where are we? The input costs in many places are up. And of course, things like shipping costs are up. So, we see this on the PPI side. And then what people do is we extrapolate and say, hey, man, if we got a high PPI, eventually these companies can absorb all of these high costs and they'll just pass it on to the customer by charging them a higher price. Somebody's got to pay for it, right? Now, the interesting thing is it's backwards looking. Did you notice that we have an oil surplus today? Oh. Yeah, so that might be, if that's based on models of assumption of demand destruction from Omicron. And boy, destruction because of Omicron, man, it's in the markets, huh? When one moment you're long and someone dies of Omicron, the whole market tanks. The next moment you're back on the risk on mode. One of those weird things, right? So it's a problem, it's not a problem. But going back to Omicron, if there's Omicron, because it's the middle of the alphabet, like electrical ohms. But anyways, Omicron, if there is demand destruction, then there's too much oil available and will be more available soon. Okay? Now, Putin is playing it well, isn't he? Is he actually going to attack the Ukraine? Probably not, but you know what it does is it drives up nat gas prices out of fear that they attack and supply of nat gas gets diminished or even cut off during those weeks and months, right? So just the idea that it could happen, all he has to do is line up a whole bunch of tanks along the border and he doubles his money, doubles his revenue. Smart dude, man. Okay. Right? Doubles his revenue. Amazing. So anyways, we got to keep an eye on the PPI, although I think, like I said, it's backward looking. It doesn't tell us how much inflation we'll have next year. And I still think much of our inflation will diminish next year, and partially with the Fed raising interest rates, but then really just normalization of the supply side I think is going to be most important. But anyways, PPI will be informative today. Okay. And then zipping out all the way to Asia. Yeah, there's some good, interesting information out of Australia and New Zealand. Remember, they're super concerned about things like the housing market. So getting data out of those countries will be important. Okay, on that subject. And then check this out. Inflation out of Great Britain. Well, check it out here. Today we find out unemployment, for example, is 4.2%. So if you think of it like a dual mandate, although the Bank of England doesn't have a dual mandate, but if you think of it like how the Fed would interpret this information, dude, 4.2 is actually pretty good. 4.2 is pretty good. That's pretty close to what full employment would normally be. I don't know about their labor force participation rate, but let's just take that number for what it is. 4.2 is pretty gosh darn good. Okay, and then tomorrow we're going to get inflation data, which is the other concern from that central bank, right? So could be a very informative day tomorrow, getting sort of the second piece of the puzzle. Although, I don't expect Bank of England to raise interest rates in a time when the government is shutting everything down. That would seem strange, because shutting everything down would probably maybe cool the economy, or maybe it makes it worse. Maybe it jacks up inflation even more, right? So good luck with that, UK. So this big dogs. Excuse me. Anyways, moving on. Hey, we got the FOMC policy statement. We're pretty sure we know what's going on here. Dot plots might be interesting. And if I remember correctly, we might get the dot plots today, because the meeting actually starts today. But the statement is tomorrow. So that's the big news, but most of that is going to be priced in. I don't think there's going to be a big surprise, and I don't think there's going to be a big disappointment. I think the market has its thumb on this because, like I was reading an article, I don't know, I think it was yesterday, and they were saying, well, we think Jay Powell will do this, and we think Jay Powell will do that. Think what? He already told us. He already told us they were going to adjust the taper, right? But what's priced in is they're going to double the rate, be done in at the end of March. So I'm going to incorporate that in my 2022 outlook, and I'm going to give that to all members of FX Bootcamp. All members, video members, swing trading members, day trading members, everybody, live group. Everybody will get that on the 22nd of December. Cool. So swing traders, look for an email from me today. I'm going to open up your accounts at the new website as I get ready to transfer it from the what do you call it? From the production server over to the live server. So it's not on fxbootcamp.com yet, but it will be probably next week. So I'm going to set you guys up today. Look for an email where you'll be able to log in and look around, right? And you'll be able to create your password. It's a good idea once a year to change your password and stuff. So it'll ask you to do that. But you'll be able to log in. You'll look around. You'll have access to the room. I'd like to do a meeting with you guys on Thursday if you don't mind. So one more swing trading meeting, one more. We could do one more, but we'll do it on the news site. So again, look for that email so you can move over to transition over to the news site and all that kind of stuff. Yeah. Christmas coming early, right? Right, Norris? Okay, cool. Now Thursday, Swiss National Bank. Bank of England. ECB. BOJ. Holy schnickerschnocker. Yeah, I saw that, VOD. Okay. And then way out here next week, RBNZ. Wow. Wow, huh? Wow, what an amazing week. Okay. Of course, everyone in the day trading group, I'm working with them every day. Cool. So, what an amazing week, right? What an amazing week. What an amazing week. What an amazing week. Okay, so let's start with commodities. So here's the thing. Okay, here's the thing now. On my longer term view, I have discussed, and I did it at Trade Non-Farm Payrolls Live. It's near the end of that 3-hour webinar. If you want to catch it, it's at youtube.com/FXStreet. And I gave an overview and, more importantly, the reasoning behind it for WTI and its ability to go up. And that's way back here when we were at this price. Okay. And now what we're seeing is supply is a little higher than demand. So there might be a situation where we hang out here for a while. Okay? Can't see the new fundamental. You mean macroeconomics? You're probably not on the new site, Yusta. You're probably on the old site. You haven't rolled over. Yes, so just wait. Okay, just wait. Just wait. We'll get there. Wait for the email. It's coming, man. It's coming. I'll show you, though. I think I can. I think I can. Oh, wrong one. Hang on. Why doesn't that work, actually? That should work, shouldn't it? No. Ah. That works anyways. All right, we'll do it this way. So when you log into the news site, stupid Windows. When you log into the news site, it'll look like this, depending on your membership level. Okay. This is nice. It's nice and clean. It tells you where you left off. So you can enter the training courses here, or you can just resume where you left off last time. The reason that's an interesting feature is because there's 89 lessons. Some of them are only 20 minutes, but most of them are closer to an hour or more. So you're talking about what I now call the Central Banking Fundamentals course. Okay. Okay, and that one takes 2 pages worth of data. But, this is the lesson which you're learning how to manage a
$10,000 into reserve.
A balance sheet at a commercial bank.
They balance. So you have that money reserved. You can see in this case we didn't loan anything out. But we have $10,000 set aside in case somebody shows up to request their $10,000. Did the bank make any money? No.
Okay, so anyways, you're learning how to manage the balance sheet of a commercial bank. So that's all in that new section. The other cool thing is you can just click resume course, and it takes you back to the last one in the process of you completing. So when you're done a lesson, you just mark it as complete, and it tracks it for you. So when you're here, you can see I've done a little bit of progress on this one, a little bit of progress on that one, and I haven't started all of the other ones yet. So that's kind of where we're going, and that's where that course is. Okay. So it's beautiful. It's really well organized and much cleaner as a user interface. I think you're going to like it a lot. My guess is we're over 50 hours now, probably closer to 60 hours worth of training videos, and they're no joke. I think if I bring this one up, where's the new one? Macroeconomic principles. Like, this stuff is no joke. Let me show you one.
All right, record on this computer. What you would like, since we've talked about capital and labor in previous examples, we would do it like that.
See?
The output is a function of how much capital every worker has. Okay? So I'm not going to go. So yes,
so let me
more
just
and more machines, more and more
I mean, it's good. I'm telling you, I was there. It's good.
They're going to increase your output. But we're also, remember, in the back of pop in the oven, you're like, okay, another truck to the fleet, but the truck sits in the parking lot. Roads, they get popped. Right. All right. So the baker bakes some bread. Or expense will be 30% of y, and y is equal to the square root of capital. All right. So
this is good, right? You're like, wait, y is equal to the square root of capital?
Invest 30 cents.
Yeah, because of diminishing
and
returns.
It'll always be the same. And we know capital, like the output, is diminishing. So your investments will diminish over time. This is good. Okay? This is good, but it's going to pose a problem for us. Okay? So here we are. We grow here. We get to a more productive month. You're spending what equal.
I mean, it's beautiful, right?
Appreciation. Then you get a steady state of output, and you're stuck. Zero growth for a while.
Oh my God. Oh my God. It's so good. It's so good. You're going to love it. Yeah. Telling you, 13 hours of that stuff, it's ridiculous. So if you want a Harvard education for cheap, go ahead, man, fxbootcamp.com. Anyways, there you go. So, yeah, I'm going to have to roll you guys over. Well, oh, euro dollar. Okay. Well, so I want you, right, Shoaib, you have to look at this of like, what is the fundamental trend right now? Crude is one way of looking at it, where we were crushed by COVID. We tried to rebound based on, right, a return to production, if you will, and now sideways. So you could at this point say maybe fundamentally we're moving into a period of sideways, right? So that would be carried out in things like euro dollar. Now I know euro dollar had a big move, right? So we can go look at that if you want. I don't mind jumping around a little bit. Okay. Okay. And what do we see here? Oh, I planned this out last week for you on Wednesday. 1 week ago, I had it planned out for you. What? White Rock, you already went through the macro stuff? Yeah. So I had a PhD economist working with me he developed all the slides for me, but I designed all the lectures. So I'd design everything out. I'd bullet point it. I'd write everything out in a notebook like this. And I just take screenshots from my phone. I'm like, make the slides. Yeah. Make the slides, man. And it's good because he knows his stuff, obviously. You know, if you're at a PhD level in economics, you know your stuff. So I would say to him, you know, like the solo growth model, I say, okay, the reason I want to go over that is I want to show this, this, and the other thing. And my intention is to break it so that they see this part, they see this part, they see that part. And my overall point and conclusion at the end will be tied into, you know, comparing one economy into another and whether it should have catch-up growth or sort of the mature growth of an economy. And you're making your decisions, right, based on how that society is investing, right? And you could have some sort of assumption of returns, which is our point. That's our point as a macroeconomist. How do you compare, you know, New Zealand to South Africa or something, right? And so he'd say, oh, I get it. And he would do this, that, and the other thing. And then I would go over and no, change this, change that. Okay. Right on, Hope. Thank you for all that you do. You give us all hope. So anyways, what do you think of the plan to the person that asked about is euro dollar going to go up or down? Well, what's the trade plan from last week? Yeah, that's funny, Norris. Okay. You got it at 115.80. What? 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 You oh my God. You hold your buy position at 1580. That doesn't make any sense. You bought it here and you're still long? All right, you need to stop trading. You need to, that's ridiculous. So what should you do now? You should stop trading. Okay. You clearly have no risk management at all. Okay. I don't know. Talk to your priest or your bartender. I don't know what you should do with your losing trade, but that's ridiculous. So you don't know how to trade. You should stop risking money. What you do with that, I don't know. I'm not telling you to stay in. I'm not telling you to get out. I'm not telling you anything. But that's a disaster. That's just terrible. So you can be insulted by that, or you could take it like, yeah, I know what you mean. Good. And then put some money into education. Yeah, I mean, my goodness. Dude. Okay. Anyways. So here's the plan. Like we said last week, the first real target is, 1380. And if we can get a macro going, we're going all the way to 17. But boy, oh boy, this has been redonkulous where, let's just look at this week. Last week, we ended on a buy zone with reasonable happiness, reasonable mood of recovery and improvement in the economy and everything. And And then based on that, you would expect this for a Monday move. And that goes in line with what we thought last week, right? So what we'd be doing is you set up this as a bottom, this is a higher low, and somewhere out here today or tomorrow you'd have yet another higher low, and we were thinking this, okay? So everything's good here, and then some guy dies of Omicron in the UK and just destroys everything, okay? And in some cases, you know, many people would consider that a lower low. Just destroys all the other ideas, right? And then, well, no, we're going to come back. Okay, no, we're just going to come back. Okay, so that's that sort of El Suckos. Okay. Okay. Right? It sucks. And right now it's sort of rangy, but something to be, you know, reasonably grateful for is that on Sunday we knew that this was a plan A for a bull, and then this was a plan B down here for a bull. So the most patient of traders were able to get in this. Now, somewhere along the road last night in Asia, I moved my stop probably here. It's funny, but it hurts, right? It's funny, but it hurts. Oh, yeah, sound like Gwen Stefani. Oh, it's so funny because it hurts. Oh. Oh my God. So anyways, the day trades are were destroyed here. But the swing trade is still here. Right? Okay. Okay. So son of a gun. So here we go though. Are we climbing these stairs up? And it's hard to tell now, but what do we have technically? Well, technically I got rid of the 2155, and technically we got a 5A cross up. Now, are you going to try to ride it up? Are you going to try to ride the 4-hour 5 or the 1-hour 21? But of course I don't have a 1-hour 21 anymore. But, you know, if this was a trend, and this is the problem, like it might be a trend, but it technically isn't right now. Technically if it was a trend, you'd buy this roll reversal. If it's a range, you would sell it off the top. So this is what a range trader sees. And, you know, quite frankly, the technicals don't really tell you which one is which. So a range trader would sell at the top, and a trend trader is going to say, okay, you're going to buy here. But that's a bit of a guess. I mean, that is still of a guess, right? Why did I remove this? Somebody asked a question in one of the live groups. Who was it? I don't remember who it was, but I think it was Darko. Yeah, right, Mr. D. I think he asked about market makers and stuff like that. And I said, whoa. Whoa. I said, let's in fact not talk about market makers and in fact remove the market. And I said, you can have the theory or assumption or belief, whatever it is, that market makers are residing around here at certain prices and pushing things around and collapsing our trends or whatever. But what I was saying in that moment is I just assume, based on what I see here, that we just lack a market, and that it might have to do with price discovery under the new convergence of tapering and rate hiking over the next year, right? So I said, instead, I think you should look at it like maybe it's the same prices, but don't look at it. And I think I used the word conspiracy, and he's like, wait, I didn't say that. And like, well, I'm using it as an example. But I said, instead of thinking about, market makers trading against you, because I honestly don't believe that. I just don't believe it. It's just not part of my belief system. So I said, instead, look at it as a range. And that until we break out of it, it will be a range. And that's why I removed the market analysis and look at the trend. The trend is sideways, right? So you don't need the 200 EMA because there is no trend. There is no market. There's only price. So you can kick it off the bottom here, kick it off the top there. Thank you. 08. Darko's like Algo. Yeah, but the Algos are doing this. They're not trading against you. They're trading. That's how you do it. So they're looking at that, and somebody is saying, okay, Algo, this is the floor, this is the ceiling, and they're probably on something more like a market like this, a 5-minute or something, and they chug along this way, right? And by the way, based on the rules of engagement I have in my book, you buy this, you sell that. Okay? You don't buy this, you don't sell that. You buy this, you can sell that. Okay? But these are no-nos, no-no. Okay? No-no. Nenda says, well, some people see where the stops are. How do they do that? Okay. Vika says, well, the brokers might have algos trading against them. Well, like I said, during the Swiss National Bank debacle of, I don't know how many years ago, 7 years ago, major brokers went out of business because it seems that they were trading against their clients. That's what it seems like. That's why they, one broker lost $500 million. Overnight, $500 million. One of the biggest foreign exchange brokerage in the world. Turns out they might have been trading against their clients. If they had entered the trades into the interbanking system, there wouldn't have been a problem. So maybe in those situations, the brokers do have algos that say, okay, everybody's long here, so just short against them because we know 99% of them are going to lose money. Okay? Well, Trader's Way that day was not harmed at all because they actually executed all the trades. They were in the interbanking system, and the liability was now on the clients, but not on the broker trading against them. You see the difference? And that's why I'm like, oh, Trader's Way. Right, I love you. I love you, Trader's Way. Right? So that was a big turning point. So look, if you're worried about stuff like that your broker is trading against you and has algos because they see where all the stops and entries are, then get out of that broker and open an account at Trader's Way. Okay? Oh, don't even Dodd-Frank me, man. Don't even. So anyways, so that's what's going on there on the short run, yo. But what's the longer point of view? If we had a normal trend and if this was climbing, another thing to be grateful for perhaps is the slope of the mean is positive. Okay. So the question is, why is euro dollar moving up? Well, one way of looking at it is, look, it's supposed to. Okay? Think of it this way, Perevbat. Okay, Perevbat. Think of it this way. It's going up because I said it would last week. Okay? Very clearly, I drew all the arrows, right? Up, 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 up. I got arrows here. I got another one for the second load. Okay? So last week, this is, Monday, Tuesday, Wednesday. So, yeah, Wednesday in Asia. So Tuesday afternoon, I drew all this. So why is it going up now off this price? Well, I can try to backfit some fundamental data in there. I could say, oh, well, it's seasonal, or, well, it's this, or, well, it's that. But the honest answer is because it was supposed to, and therefore people bought it. Okay? Why did it go up? Well, we were at support. What was a bear going to sell it at support? No. So would a bull buy it at support? Yeah. Yeah. So it just, well, what else was it supposed to do? Okay. Now, Piggy, this is sort of a response to the economy being shut down. Okay. And no follow through on that. So once again, are we kind of stuck in a range here? Okay. That's all. That's all. Is this a full recovery? Like we don't care about that anymore? Oh. See, the interesting thing about fundamentals. Now, a fundamental strategy and a technical strategy, I never mean to pit them against each other. I don't believe one is better than the other. There's strengths and there's weaknesses to each, but I believe if you combine both technical and fundamental strategies more often than not, you'll benefit. You'll be a better trader if you understand both, is all I've ever said. Okay? That goes back to when I spoke at the 2004, maybe 2005 Forex Trading Expo. I was a keynote speaker. I was on the home page of, right? My picture was on the home page. Okay? Big deal. Even back then, I had this opinion that we should have a healthy understanding of both technical and fundamental analysis. Now, frustration to a fundamental trader here is none of this that we see is fundamental. Now, there is this exogenous shock play, for sure, but then the up and down, the up and down, the up and down, well, that's challenging. Now, you might say, when you look at this, this is partially exogenous shock, but eventually the exogenous shock turns into the fundamentals. Okay? If it's short-lived, like there's an explosion, like in a terrorist attack, or there's an earthquake and it takes down a major city, well, eventually we can see past that and very quickly say, well, the city will be rebuilt and this other stuff will happen. So at some point, the exogenous shock becomes the fundamentals, right? But then the long-term normal at some point will come back. And like, for example, we learned to live with Omicron, and this shouldn't be going down this time of year, but it is going down. Okay, so there's that in play, but then the worst case scenario to a fundamental trader is when it's not doing anything. And I've taught everybody in the swing trading group and the day trading groups that where you're likely to lose most of your money is when the market is going sideways. Because it's not trending. So what happens is, well, if you're a bull, you're a buyer, and then it collapsed, And if you're a seller, it's rallied, right? Because you might have sold here and then it popped up here. And then a bull bought the dip, but then it dropped down here. So then maybe a bear sold here, but then it popped up here. And you're just like, son of a bitch. Okay. So it's difficult. Look at these, right? Now, a pure technician, and in particular scalper, might actually be doing quite well in here. And you're like, well, what's the big deal? Well, the big deal is if you look at all these wicks, for example. Okay. That is unusual. That's the issue. That is unusual. So if you're doing really well on this, hey, awesome. That's really good. Got nothing but love for you. But if you're feeling frustrated, I understand that as well, for sure. Okay, for sure. So this will probably remain intact until what, next year? Okay. Okay. So I don't know. We'll have to see about what happens with the lockdown. And then dollar got strong in November. Okay. But usually it's January. So that's going to be a big question. How do you play that out? Right? How do you play that out? Is it strong 2 months early, therefore it'll be weak in January? No, I don't think so. I think like pound dollar, for example. I don't know anything about the pound on this one, but let's say typically in January we have a move like this. Now, the move is down for 3 weeks, up on the third week, and then down probably the last week. But nonetheless, let's say generally down. The part that could screw that up is, let's say this part is correct, but then Bank of England says, or the British government takes down all the restrictions, and all of a sudden there's a big recovery rally, and you're like, well, this was supposed to go down, but now it's up. You're like, oh no. So, holy smokes, hey? Holy smokes. But I do have to stick with the short-term seasonality, which is not fundamental, by the way. So, like, you might say in a typical year, you see this pattern, but what fundamentals say, and let's say that's the value of the dollar, and fundamentals say that's what you think will happen. Okay, so let's say this is pound dollar over the course of a year in black. Okay, and then pink is more like what you're actually trading fundamental, and now you got to combine those two, right? Know when to hold them, know when to fold them. Raymond says, you mean this move up today being a Santa Claus rally? No, I don't know about that because, again, one of the problems that's happening, I believe, in the stock market, if you're a stock market investor, is because of the change of policy, we have a rotation in portfolio construction on top of being forced because of the change at the Fed. But then based on seasonality, a rebalancing of portfolios as well, which means there's going to be a lot of, how you say, the breadth of trading in the stock market will be high. Some stocks will be volatile, others will not be. That there'll be, this time of year, a lot of investors will have gone to some cash, but by January, deploy that cash, and it could be back into the stock market. It could be into a real estate market, but typically a wealth fund wouldn't do that because there's such different asset classes. So if you're in search of yield or search of appreciation, yield might put you, I don't know, you're buying, let's say, dividend ETFs or something. Or if you're stretching out for better value, because that's the thing, right? Growth over value. And that's what I mean by a rotation in portfolio construction. Well, if you're rotating from growth to value, you look around the United States and you're like, man, there's not a lot of value. Everything is, we're at all-time highs. Everything, there's nothing cheap. There's nothing cheap. That's just it. So then you look at some wonderful Dutch company or a wonderful German company, and you're like, dude, it's trading at 11 times forward earnings, and something in the United States is trading at 17 times forward earnings, and you're like, maybe Europe's the place I got to be, right? So all of that impacts what we see, but none of that to me is that crazy. None of that is that crazy. The Omicron, right? The return of COVID, whatever you want to call it. Because we had COVID, right? Remember when we called it the coronavirus? So we had corona, and people stopped drinking beer, right? Now because Sex in the City, people don't want to buy a Peloton because it might kill them, right? Their Peloton's going to kill them. Really? People is stupid, right? Anyways, that part has been the fear is what has moved a January, a January offset occurred in November, and that's Omicron, and that part too where I've had several really nice technical trades. Took a lot of patience, a lot of discipline. I took them, and they all start well. And then I go to bed and I wake up, and there's some Omicron news that just crushed my technical trades. And yet I'm a fundamental trader, right? But my technical analysis ain't that bad. It's just like blindsided, right? Blindsided. So that's the problem, right? So what we need is to, get that fear under control and resume normality. But until it happens, gosh darn, gee whiz, Batman, this can be frustrating. So look at this pound dollar again over here. It's pretty unusual to go from a bottom to a top to a bottom to a top in 3 days. Okay? It's just not usual. You see it, but not often. Okay? So, Raymond, in that case, I don't think it's a false rally, a Santa Claus rally. I think it's people were forced to act before they would have preferred. But then they look at it and they're like, well, I'm up 30% for the year. I got to go to cash on some of the positions, and that's somewhat what's happening. Now, I still have a pile of cash. I know literally I have a pile of cash. No, but I got a lot more than this in my retirement account, sitting, waiting to buy a drop in the S&P 500. Okay. Okay. I don't know about Scotiabank. In November, though, noted that dollar strength. Well, so if it happened in November, that would probably be around the Omicron risk-off idea. But then also, Gordon, let's just say there's lots of different disagreement, or let's say there's lots of different opinions by economists and investors about the impact of the taper and the impact of future rate hikes. Okay, so if you have 13 different economists in the room, you're going to have at least 15 opinions, of which they're all likely to be wrong. Okay? So here's the thing, Gordon, right? I have said multiple times, I believe the taper is a dollar strength play. Okay? And that the future rate hikes is a dollar weakness play. Okay? And the reason the taper's a dollar strength play is it forces people out of investments that they made in the past. It's not that it's bad. In fact, you wouldn't do it if things were bad. You would only taper if things are good, right? But the thing is, if you made investments last year, 18 months ago, based on the Fed not going negative and quantitative easing at the big pace it was, plus a bunch of fiscal stimulus in the works, so you sell the dollar, right? I mean, dude, that's just straight up fundamental analysis, right? So when that is withdrawn, announce that stimulus is no longer needed, that play now is dead. And so if you were short dollar last year because of that, you're simply taking profit on those positions, which creates the dollar strength, or at least the illusion of dollar strength. It's just less selling of dollar, right? Then we get through that, and then there's the new play. Okay? Inflation versus growth. Okay? But Gordon, are you still with me? Gordon, what does inflation actually mean? If I wanted to buy something 5 years from now, and we thought that there was inflation now, and that the inflation would remain for 5 years, okay? What does it mean for prices? In 5 years from now, the thing you want to buy, will it be worth more or less? Let's say it's a house. You found your dream house. It's $1 million right now, but prices are going up 5 to 10% per year. How much is it going to cost you in 5 years? Will it be more, less, or the same? If you expect that inflation, the value of the house going up, will it cost you more dollars or less dollars? Okay? Is that right? Well, just answer the question. More, right? So, there's a couple of ways to look at this. Did the value of the asset increase? Okay? Or did the value of the currency in which it is priced go down? Okay? And so inflation, okay, is different from appreciation. So inflation says, let's say 1% inflation means this will buy $99 worth of stuff in a year, and $98 worth of stuff in 2 years, and $97 worth of stuff in 2 years. Okay, so you calculate all that in. Okay? So what happens is if it only buys in 3 years $97 worth of stuff, the dollar store has to find a way to charge you more. Squeeze a few extra pennies out of you, right? Or if it's a value, right? So what happens is to offset that, because you can't actually reprint this and say, this is a $97 bill. So the way to compensate for this static denomination, this unit of account, this is 100 units. Okay? 100 units. Not Satoshi. Okay? 100 units of dollar. So if it doesn't buy as much, then the way to compensate that is you have to charge more. Okay? So what I'm kind of getting at is if the government and if analysts expect inflation to persist for the next few years, that means the value of these 100 units will diminish. The dollar will weaken. It's the definition of inflation. So if I get heckled like, Wayne, are you still short dollar, dude? You're such a loser. Thank you, by the way, for logging into my webinar and calling me a loser. I appreciate that. It makes me feel so good. But the thing is, isn't that the definition of inflation? So you have to pick and choose when you want to invest. Okay? Not only like, what do you think will happen in 5 years, but then you have to understand business flows of capital around the world. Okay? Okay? Where will this go? When does money go here? When does money go there? That's pretty usual business. We understand flows. Okay? Money can go to Japan to pay for taxes, for example. Money can come to the United States to pay taxes. Money can leave the United States to invest. Okay? I can think of 3 times in 2022 in which I want to buy the stock market. I'm already ready. I've been preparing for a month and a half. Okay? For the first opportunity. So that's where seasonality comes in. Okay? You're like, you think corn prices are going to go up. So now that it's December 14th, you're going to plant some seed into a field in Indiana and get you some corn because you think corn prices are going to go up. Well, maybe it's the wrong time of year to try to plant corn seed is all I'm saying. Okay? Keep your seed dry, son. That sounds so bad. Keep your powder dry until the spring, and maybe that's a good time, right? But anyways, that's all. Try to look at what you're going through now as unusual. If you're kicking butt because you're trading ranges and you're really good at short-term trades, if you're very good at scalping, you might be doing very well right now. Cool, man. Got nothing but love for you. I love it. Awesome. Like high five, big hug, slap on the ass. Good job. Keep up the good work. Okay? That's the Cuomo style, right? Andrew, your hand is still on my ass. Oh. Yeah, just joking. So anyways, this is unusual, and if we can get through it, normality might be able to return. Okay? So when is the S&B going to sell out of their stock positions? That I don't know. And honestly, any central bank that bought equity, like Bank of Japan, I don't know how you do it. I don't know if you can. Okay? I don't know if you can. So anyways, like I said, I'm going to do a 2022 outlook, and I'm going to break down a lot of different things. We need to talk about the taper. We need to talk about rate hikes. We need to talk about midterms. We need to talk about commodity prices. We need to talk. There's a lot. I've written down a whole bunch of things, and I don't think I covered them all. Here's my notes. Delta, Omicron, Fed, QE, midterm elections, Fed hikes, inflation, stock market, yield and bond market, okay, value of the dollar, economic activity in Europe, economic activity in emerging markets, commodities, and I know I'm missing a bunch of other stuff too that I would like to, if I can remember all of this stuff, put it together in a PowerPoint presentation. Okay, and that would go out to everybody, even if you have right? The standard membership at FX Bootcamp is so you can get access to all 89 videos in the training courses. So you would be invited to a Zoom room on December 22nd. It's video members, swing group members, day trading group members, live group members. Everyone will be welcome for that, and I'll give an outlook. There's so much I want to talk about. I might not be able, right? I know there's more than that, and that's quite a list. So keep an eye out for those emails, guys. All right. Okay. Take a look at the piggy. Okay. Again, this is an Omicron, idea play, and it's just come and gone. Very, it's what the range says, but the discussion there was the assumption. If you have the assumption of the lockdown being the move, then that's how you would set that up. What we see here is M3 is the top, M2 is the bottom. There's nobody in control of this. Cisco's like 90 videos. Well, the thing is too, I think there's going to be 4 more videos total. So yeah, it'll be mid 90. And I would guess the average video is 40 minutes long on average. Some are shorter, some are longer. Okay. And that puts us exactly 60 hours. So I'm going to have to update the website. Okay. Yeah, okay, we can do some Bitcoin. I'm okay with Bitcoin. Okay. Doge is up 30% today, right? The last time I looked. Right? Elon's going to sell Tesla hats and t-shirts in Dogecoin, and that made it go up 30%. Okay. So anyways, what do we see here on the 4-hour? Okay, we even dipped below that double bottom, which was the basis of the potential uptrade. Oops, didn't mean to do that one. Okay, let me get this back here. I wanted to keep this. Okay. So now that we're here, there's nothing for a bull to do. Okay. Okay. So there's nothing for a bull to do for quite some time, in my humble opinion. And so it's just falling and falling and falling. Okay. Now, you can use some analysis and kind of guesstimate where this is. And my guesstimate here would be this way. But we can look at it some different ways. Okay. And based on this year, this has been a hell of a year. Okay. Now, if you consider it a double top, you're going to look at it differently than someone considering it a higher high. So a higher high person would have, you would see this as a 786, which is a big cautionary tale, by the way. Okay. If you go from the year low to the year high, we're getting pretty close. 45 is going to be your 618 Fibonacci retracement. So there's not a lot of hope after that. Okay? And you can see in the past that this was an important price. All right. So below all that is a revisit to 30. And, stranger things have happened. And then we have to look at this. This is an old high. Then it was important here. Then it was important here. Then it was important here. So I think that is more realistic. So it's 40, right? So we basically have 45 and 40 are going to be likely the key numbers if you are a bull. And of course, a bear would be thinking next stop is 30, not 40. Okay? Interesting, right? Okay, so we got an oil break here, and I started my the webinar today based on this idea that we now have an oil surplus. Oil comes down. So if we get oil, remember when inflation started hitting, oil was way up here at 85, and it came down almost down to 60. We said 60-ish. 63 was the number. So now, how about this food for thought, guys? We have this kind of move for a while. That takes down inflation. Okay, that takes inflation down. Deflationary. But I think on the longer run, I think, oil can go up. Okay? No, well, there's more than one. Let's see if I can find it for you. You are not alone. I am here with you. Though you're far away, I am here to stay. Okay, that's too far back. That's not it. Maybe data. Where is this going to be? What's the date on this? October? No. What's the date on this? March. All right. It's somewhere in here, guys. Renewable, no. Explore full range system. Renewables, no. Residual and carbon, no. Global. I don't know where the report is. It came out last night. I wish we could just get a press release. Latest news, maybe. November, December. All right, I don't know where it is. But anyways, somewhere in here. Yeah, we show that change of demand analysis has created a bigger supply of oil than anticipated. But I just can't find it. This is a weird way of organizing the website, but it's how Sorry, guys, I can't find it. But we have a little more oil than we thought. Unless I'm remembering it wrong. Maybe it's the EIA, really? I didn't think it was the Americans. That's old. Economic growth in China. Anyways, it's on one of these. It's not this one. It's not that one. Anyways, do your own research, I suppose. Okay, so oil coming down today is not shocking, especially since I opened my webinar and I said, yeah, oil supplies are going up, and then boom, within a time frame it tanked. So anyways, that's what's going on. Nothing's right. I'm torn. Lying naked on the floor. Or is it trading naked? Yeah. EIA lowers crude oil price forecast starting the week. No, that's not it. That's too far backward. Yeah, that's too far backward. That's 2 weeks ago. That's not it, though. But thank you, Michael. No. Mahai, no. A lot of what's happening is a little bit political, but there's a lot going on. Okay. But no. What'll happen instead, Mahai, is oil will come down and diminish inflation. And then the Fed has less concern. Yeah, but that's why I thought it was IEA that had that, right? So, I don't know. You guys can spend some time on Google and see if I'm right. Okay, gold coming down to the bottom. Could a bear sell this? No, because even the weekly supply is old. No, I'm talking, the information has come out in the last 24 hours. I just don't recall where I got it. Okay, a bear cannot sell this, or they're a fool. And a fool in their gold is easily departed. But if you're a bull, you're at the bottom of a range, but okay. Okay, we're one standard deviation from the mean. Those are price action pivot points, by the way. Check out that kiwi, huh? Look, it was red hot a couple hours ago. Anyways, what does this chart say? Sell. Okay, that's all. So if you're wondering why this drop here, okay, bearish selling zone. I even took the liberty of writing it down for you. Cool. Lovely. What's the target? Target is 76 and some change. 76.29 or maybe 76.16. Okay. Take a look at Kitty CAD. Okay. I was too aggressive on this one. And I sold it, believe it or not, here. It's not often on a move like this to trade so aggressively. But at that time, I thought I had the volume behind it, but there was just nothing. And it did this for forever. Now, a more conservative trade is selling it here. Okay, and this is simply what we do in the day trading group. That's a bearish day trade. Easy peasy lemon squeezy. All you had to do was be a bear. And I think when you go from here to here, being a bear is not too difficult, right? Now, check this out. Once again, if you're a day trader, this is Monday's sell zone. And the target on Monday was right here. Ha ha ha! What? Shut the back door. Back the truck up. Oh my God, it's so beautiful. So anyway, so I'm in this and I'm making money, but as you can tell, I'm not making much. Man, it's crazy. What crazy days. Crazy days. Man, it's hard to get good work, huh? It's unbelievable. Just crazy difficult to get good workers. And yet, I mean, I just don't understand this economy sometimes. So crazy. Oh, it was IEA. Okay, cool. So anyways, I'm exhausted. I have to go yell at somebody. You know, I'm a lover, right? I'm not a hater. I'm a lover. So I really dislike yelling at somebody, but I have to go yell at somebody. Maybe break some legs or something. I don't know what you have to do to get someone to do their job. But that's the life we live in. So this just happened. My name is Wayne McDonald. I'm a currency trader. And I get to enjoy all this fun with you every single day. Yeah. So I'll see you later today. Swing traders, look for an email from me today, because I'd like to get you set up, get your account set up on the updated and brand new website, so that we can meet on Thursday for an all hands meeting. Swing trading. I'll do another swing trading meeting. Why? Well, why not? Okay, so Jimmy, look for it, okay? And again, if you join the day trading group, you save $100 and you get to trade the rest of this week. So right? So check those emails and become a day trader. Okay, that's open to anybody. Anybody become a day trader. And in January, we will meet twice a day, pre-London, pre-Asia, pre-London, pre-Asia, pre-London, pre-Asia. We even meet on Sundays to set up your Monday trades. If you like that idea, join the group. So, let me bid you adieu. Peace on earth, may the pips be with you. May your profits be above average. Any last questions? Thank you, Maida. Any last questions? Yes, Lucas. It's just what you're asking is just too much right now. That's all I can say. It's too much right now. Just too much right now. Yeah, I gotta build the foundation before I put on the roof, right? Yeah. Yeah, we'll get there, right? Hey, it's only time and money. We have unlimited of both. Oh, wait.